Hey everyone. So, we're going to go over a bunch of stocks today that moved pretty large today with some of these tech earnings. Apple, we're obviously going to go over. Tesla, we have to go over. There's just a litany of them. I want to go over NVDA and the move that happened there. There's a bunch going on this evening, and we're going to cover it. As always, these videos are extremely timely and actionable. So we're going to go over what you can do if you're in some of these ideas. They're just ideas, and then you have to kind of put your own process in place with them. But we're going to get really into it and get very in depth. I'm only going through actionable ideas now when asked to cover stocks. So it's actually shortening the list and making it more informative. If we have time at the end of this, I'm actually going to go through the indexes because there was a little bit of change in the indexes today. So we're probably going to go over that for a little bit just at the end of the video. But let's just get right into it here. So in regards to Apple, we have a buy at this in the newsletter at 131. And if you don't get the newsletter, there's a link in the bio. Simply click and you'll get it. It's free 3 times a week. It comes out. So it's a slow mover. This is a massive reversal bar. We got above 135.46 today. I bought some after hours last night. Did not work. I blew half of it out this morning and I'm holding the rest long term. Some of these moves that we just got ahead of ourselves is really all you're seeing here. Let's throw in the indicator so you can see what's going on. Nothing's broken here. And I really don't need this RSI, but we're going to use that a little bit later, especially on Snap today, because someone placed a trade and they used it properly, and I want to show proper use of it. So, and I also used it on buying TQQ today. Maybe I'll do that as well. So with Apple, see how it's holding the 21-day? See how the 50 is starting to point up? Okay, nothing's broken here. I mean, this can go to, this is exactly what I was saying in the newsletter, 131.79, and we're still up on it, and it's still in its uptrend. iPhone sales were up 67% year over year. I mean, just let that sink in. Who's still buying these? So, and not even who's buying them, but think about the upgrades and the cost of them. It's staggering. So something to consider. Excuse me, I just have my coffee. So let's just keep going. But what do you do here? You do absolutely nothing with it. If it gets down to the 21, which I think it will sell down again tomorrow, at least off the open. Usually when you have a bar like this, let me just show you this so you can understand this and use this later because it's important. See this bar from here to here? Okay. When you have a bar like that, usually you open at the top, close at the low, you tend to go a little bit lower, right? So you go lower tomorrow, it scares people out of their position, and then it takes 2-3 days, and by next Friday, you're in the middle of this again, pushing 135, 136. Very little to do here. Very little to do here at all. So just consider that. Now, let's just keep on going here. AMC. I like this, and I really like how we are testing these lines and we're pulling back and testing them again. Nothing's really broken here. And let's just go through this. Tomorrow will be the weekly. And you really need to study the weekly on this one. For me, anyway, I look at the weekly. Look, you got right to that 1249 level on the weekly again. Let's blow this up so we can get in here. And let's move that for a moment. Okay. See this line? That's your 200 week. I did not expect to get above it. I really didn't expect to get above it yet. I think you're going to hold this 1024, this line right here tomorrow. This is a nasty bar. You might break below it and then rally back up. But I think you're going to stay above this line. Now, you can see where your resistance is on this, that 1254 level, right? You stopped it here. You tried there today and it didn't get there. I still think this looks great. And, the one thing that I've been saying about this stock, and I really want to hammer this point home, okay, this 778 has not broken since we've gotten above it. So if that was to break, that would be concerning to me. But other than that, AMC looks great. And let's get into AMD. So AMD, look, this is the weekly. Let me remove this text and let's get into this. Today is the second day on AMD. Okay, so remember what I just said was going to happen with Apple, right? How you have a day down and then you're going to have another one. Okay, see this bar? I wish I could put these two next to one another, but we don't have the screen and some people look at this on their mobile. So see how this bar almost mimics the Apple bar? Okay, you see the pattern that I'm talking about, hopefully. So you see how you break it, then you come down, everyone panics, pukes out their stock. What's it do? You still have 21 crossing a 50. Like, you have to understand something about these moving averages. A 21-day crossing a 50-day does not happen that often. If you go back and look at this chart, okay, you have 1 here, you have 2, 3, 4, 5, okay, 6 in what, a year? And that's during the pandemic. If you go back, you'll only see 2 more in the past 2 years, right? So, and this is the volatility during the pandemic. So that kind of puts it in perspective on what you're dealing with here. And if you just use this cross, some people use this cross for this reason. I don't, but it is something that gives you a better macro view. When you cross here to the downside, look what happened. That was it, right? That was it. Now, when you cross to the upside, that usually means we're heading back up. So just because you came down from earnings does not mean that the move's over. It was pretty clear in the newsletter that this is going to be very volatile, and it's just, you're not going to go straight up. And everyone that thinks you're going to go straight up every day, they're going to have a really tough time trading this market. It's going to go, this market's going to go back to going up, and you need to own stocks and understand that there's volatility with them. You know, the days of just buying out of the money options and hitting, you know, home runs that's over. You should be able to see that that game is over now. So what do you do here? You know, you make sure that you don't hit a lower low. If you take out a lower low, that would be your stop on it. So that would be roughly 82 3/4. Right now, I think that you're going to start consolidating around this 200-day. You can see how that's been going, and we've held this down line. Earnings were exceptional, and I think you'll start turning up. But you need to start seeing that happen first. A higher high above this bar, and you have one of those Morningstar patterns, don't we? And that would get us to 85.5. The Morningstar pattern is a pattern we went over in the candlestick video, and I'll link that in here as well. But you see what I'm talking about? You're setting up that pattern right on the 200-day, right below the 21 and the 50-day cross. So while everybody else is puking it out, what should we be doing? We should be looking at buying, because stocks go down because people are selling. When they stop selling, what do? They go up. Like, I hate to talk this basic sometimes, but you know, you just have to start thinking about human nature. And I just want to point something else that I brought up. Let's just go through this so you can see the trajectory of this. You know, we're not going to get into the pandemic time, but the only other time that we sold down like this was here in October. And 1, 2, 3, 4 days later, what happened? We bounced. So I wouldn't be surprised to see a bounce in 3 or 4 days now that this has exhausted itself to the selling side. And tomorrow's option expiration. So, you know, it's still going to play with it. You're going to probably pin to a number. AMD, I'm going to throw this in. Amazon. Amazon just, you know, the numbers tonight were pretty staggering. Let me drop this down here, and let's open this all the way up. And let's go from here and pull this down. And let's get rid of everything, because we really don't need anything. When you're in a base, you really don't need anything. I mean, we'll just start all over again with the lines, so we can get a better understanding of what's going on here. So when you're basing like this, like, everybody should be able to see this, right? I mean, this is just a base. And where does that base start and where does it end? Glad you asked. So it starts back here, right? Okay. Why? That's why. Okay. So where's really the resistance on this? It's not here anymore. It's pretty much here, right? Okay. So you can see this line, bonk, 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 right? And then boop, and then it breaks out. And you have another resistance right here. So that's really all you need to look at here. You don't need moving averages. You don't need anything. I mean, this is pretty clear. You have a 7-month base, 8 months base, probably actually more than that, right? We're into May. You have 5 months there, and you have this back here. You have about 10-month base. So just look at this. Okay, this can go a lot higher now. How much higher? Let me give you an understanding. It pops back into the channel. Where's the channel? There's your channel. So where can this go? 4,500. You know, I'm just spitballing here. So this has a lot of room. Getting above this, and this is going to go. You're going to start seeing people buy it, and people are going to chase growth. Could it drop down tomorrow? Absolutely, just like the rest of them. But this is something that you really need to be taking a hard look at right now. Now, I can throw the indicators in, and they're telling you some things, right? They're showing your volume today and the after hours volume. And you see how these moving averages are flatlined. They're basically dead. And then there's 21 days pointing up and becoming support. I mean, does that help you understand the story? Sure. But you're in a base. But also remember something. What else is good to look at when we're basing, right? The one thing that we talked about a lot was the RSI. When you're in a base or you're down and you think you're going to rally, right? One of the key things that you can look at is RSI. So let's go and do that now and see what that tells us. I haven't done this yet. So, okay, what is that telling us? Well, it's telling us that we're in an uptrend, right? So you should be able to see that uptrend. It's also telling us that we broke above the resistance point already here. So you're already above the resistance. This portion to here versus this portion to here is a positive divergence. On top of that, look at this. So this is just really shaping up to be a monster mover. You know, I don't know how slow it goes, but look, I mean, look at this. So it's really shaping up to be a monster mover, and you need to look at this. How do you get involved with it? Look, you know, maybe Saturday, we're going to do a live show on Saturday at 1 p.m. again. Maybe I'll find a way to get into options, or I'll do an options video. You can buy deep in the money calls on this where you find no premium, go out 3 months. I'll actually look for some tonight and I'll post them online on Twitter for those that follow me on Twitter that are interested. If you don't see it by 10 o'clock tonight, just message me and I'll make sure to do it. I know I have a lot going on tonight with all the earnings that came out to read all the reports and conference calls, but I really think that you're going to find some deep in the monies here that you could just buy instead of buying a $3,500 stock. And we'll get into that. ETH, I was asked about this today and I want to cover it for the gentleman. So, and again, we're breaking out here. So I really don't need the, let's go to properties and let's open this up. Well, that's not what I wanted. Hold on 1 second here. Let's go to this. We're going to go to properties. And for people that ask, this is Trend Spider that I use. I usually get a lot of questions about it. It's a great program, especially if you're new and you're a beginner. There's a link in the bio. They give you a 7-day free trial, but let me just show you something. Like if you don't know where to put trends, like it will show you where every trend is just by clicking that button. There's a button that says trends. I have it out of screen right now, but literally if you hit the button, it shows you where every trend is. And then you can start understanding where they're putting trends, right? And then understanding if you agree with them or disagree with them, but it's a great way to learn. Anyway, let's get back to it. So I was asked today, if this finally breaks this level, people will remember that we had this in the newsletter down here, and then it didn't go. We got stopped out, break even, and now, of course, it's continuing to go. From this was a clear breakout, and then it went. And just point this out. You know, this is the first time it tried to go. It didn't go. It always goes, right? Never goes the first time, always goes the second. You know, they call it first mouse, second mouse, boom, breaks out. Getting above this, I was asked today where it can go to. I said, I think it can go to 6,500, 7,500. I'm going to explain why. This is only your resistance. I mean, let me show you where your resistance is here. Okay. Your next resistance line is 33. There's nothing here once you're through this line. Once you're through this 28, there's nothing till 33. After 33, your next resistance point technically is here, 67. So this has huge upside. Since this came out, it's done nothing but base and find support. And look at how the volume's been picking up weekly. And look at how the volume's increasing. So if you were interested in getting involved in this, there's a couple different ways to do it. This is ETHE or Ethereum. You can just buy this as you buy a common stock and trade it like a common stock. It trades pretty much in parity with it if you don't want to go open up a Coinbase account. The other trades people are doing, and I'm not going to turn this into a crypto video, but you can do a trade where you buy ETH versus Bitcoin. ETH will outperform Bitcoin now, in my opinion, for a litany of reasons. But I would recommend that you look at this ETHE. Just disclaimer, I own both of them, and they are speculative. So I was asked today, people were asking, why did I say don't buy this off the open? And I'm just going to get into this. Okay. This is Facebook. I thought I had a FB up there. Nope. Okay. So let's throw that up there right now. So people were asking me why I said that, and I'm just going to point this out so that everyone gets it. So I try not to get too technical, but we're going to have to tonight. So there are a lot of trend lines on here that I don't even draw because I don't want to confuse people, especially beginners. More advanced people are actually commenting on these, and then I'm getting more in depth. I'm trying to create a system where we can all learn and be interactive. And I have a couple ideas, so I'm going to run them by people, and then we'll just figure out what works best. But people keep sending me charts on Twitter or email or Reddit, and I love it. It's exactly like I can see people learning, and that's exactly what I'm trying to do. So, you know, I don't want to be the guy that says, buy this, buy that. I want to be the guy that shows you like, hey, you can do this. If I can do this, you can do this. Believe me. So here you are. And I was asked why. So this wasn't here today, right? So let's get rid of this after hours because we really don't need after hours, right? So I was asked why. Well, there's a trend line right here. And you should be able to see this. I can draw that down. I can draw that much better. There it is. So there's a trend line there. And I'm like, man, it's not going to break that. There's no way this is going to break the upper channel. Now, why do I say that? Well, let me just show you something here so that you can see this in a little more detail. Okay. That's your channel. You might not like it because you think you're supposed to be here, but you're not. This is your channel. So I was at the lower end of the channel and I just went to the higher end of the channel. I'm not going to break the channel. Now, we can get rid of these so you can see this a little clearer. Let's get rid of all the horizontal lines. Okay, that's your channel. And let's get rid of all the indicators. That's your channel. I didn't think that we were going to flip it. The reason I didn't think we were going to flip it is one, we overgapped huge, meaning this gap was enormous. And you're gapping it in on a Thursday into earnings when we're a little overextended. You know, we hit a new high on the NASDAQ and then we just came back down and backfilled. Does this break out tomorrow? I don't know. You know, I have no idea. I think it's going to consolidate and then move higher, but I would not be chasing Facebook here. I would not. It's got to flip this level. And even then, frankly, I think it's going to be exhausted. But you have a huge base here, so you have to respect this base. Okay? This base did not go away because I hit this channel. So you're going to really have to respect that. So let's spend a little time on this one. Okay? See this? Okay, this is your weekly one that I've had in forever. So just to point this out so people can understand this, it's why I say look at multiple time frames. Okay, so here I think I have a trend, right, on the daily. Okay, then I just happen to look at something I've used a week ago or a month ago and looked at, right? And what do I have here? Go out 3 years. What am I running into? A 3-year channel. What's the probability I'm going to break that? Didn't break it here, found a reason to sell off. Didn't break it here, found a reason to sell off. What do you think is going to happen here? Until proven otherwise, it's probably going to sell off here. So you see, by looking at multiple time frames and leaving these lines in, it's pretty good stuff. I'd recommend doing it. Kellogg, this one's interesting, and I'm just going to show why. And I thought this was worth doing. So let's put this up here. And as always, it doesn't help to have the indicators in, right? They're just basing. They're not really doing anything. The only good thing about having these indicators in right now is that we can drill down into this and see how it's completely rejecting the 50-day and the 20-day and the 200-day. What does that tell you? Well, the 200-day is the last bastion for the bulls. They're basically saying we're done with it. The 50-day is where institutions will take positions. We know from candlestick positioning that we looked at on that video that any type of wick is a price rejection. What is being rejected? The 50-day and the 200-day are being rejected. The 50-day is being sold, not bought. Who's doing that? Institutions are doing that. Okay, you see how this all connects? See, do you see where I'm going with this? So like, why do I want to buy this? I don't want to buy this. Where would I want to buy this? Okay, so where's my K? Let me remember what this is. There we go. So, and I do tend to move the charts around a little bit, and you know, we're just all going to have to deal with it. I think it's helpful to drill into this. Okay, it can't get more clearer that you're in a downtrend, and this is what I wanted to show you. There's a couple things going on here, and that's why I thought this one was worth doing, even though you're in the middle of everything. Okay, so you have a bull flag. Here's your flagpole, this green bar, and you're at the top of it, and you're underneath a downward trend line. Here's what you want to see, okay, and it's almost perfect, okay? You want to see a close above 64. That would get you above the 200-day, the 50-day. Get a close above 64 and you probably break this. But you're going to have to see that close. You're going to have to get through these wicks, and that's going to take you to $64. Get through there, and if you really want to own this, then that's the spot to own it. $64. I really don't see it going anywhere higher than, and the way to count this out, it's for people that want to learn this. The way to count with your target price is the top of that trend line. Wherever that trend line is, that's your target price. You could argue it's here, but you're going to have to get to 71 before you get to 72 anyway. So keep that in mind. So that's Kellogg, and that's why I did it. So I hope that was helpful and I explained that well. MUDs, let's go to the daily. I was pretty vocal about this one in the newsletter. And I hope I was vocal on Twitter, where I was very clear that I sold half the position and left the other half on at the BPA, which is where I'm in. I actually think I'm in a little higher. We made 27% in this in no time. I think this was the 3 bars, or we're up 20%, 22%. Let's remove this. We really don't need it now. Question is, what do you do now? Well, what is this telling you, right? It's telling you have a bottom in, right? So realistically, what we're going to do in the newsletter tonight, and for those that don't get the newsletter, it's free. There's a link in there. But anyway, if you don't want to do that for some reason, you're going to move your stop up to that 1530. Now you want to see something interesting. There's a couple other key levels here. Okay. Isn't that interesting? Right? Look at where the 5-day just happens to be. The 5-day just happens to be sitting at where support is right now. Okay. So that's important as well. We didn't break that. That's your new stop. I'll close below 1530 or breaking 1530, and you should consider getting out, locking in your profit, and we'll find a new spot for it. But right now, and I'm just going to show this because we're going to get rid of these indicators, because people that have been following me for a while know that I look at these levels and that they are important. Why am I not using the wicks? The wicks are price rejection. I don't care where it rejected. Okay. Basically, it's not the prettiest one, but you have a channel here. And every time I tried to get above that channel, what's happened? I've gotten smacked down, right? Every single time, just smacked down. Like, there's really no nice way to say it. Like, it's just not working. So as much as I want it to work, as much as I think NFTs are going to be around, I think it's a great idea, especially for people that have huge profits in Ethereum. But it's not working, man. No matter how much I want it to work, it's not. So when it broke, this is why I saw these levels and I'm like, okay, well, I'll take the 3 points and I'll move the rest to half, because I do think it's a real big trade. MVIS is moving after hours, so I'm going to throw that data in so people can see it. And I think this is important. I think this is important to know. See these lines, how they're not doing anything? That's why we're not even going to pay attention to them. People talk about crossovers, this crossover, cloud, all that stuff. Listen to me. If it is in a base, it means nothing. Okay. The only time this means anything is when they start spacing out like that, and this has already been rejected and reverting to the mean. There's a reason why these lines are in the middle. Now, with where we're acting right now and how this is doing after hours, okay, you've broken through 19, you've broken through 17. Your next support on this is $13. Okay. You can say that it's got support at the 50-day or the 21-day, but you're in a base. So there really is no support on those lines. As much as you want there to be, there really isn't. And I'm going to explain this because this is very important that people understand this. When you're in a base, there's no support on those lines. Look at these lines. Let's get rid of this for a moment. And I hope being more in depth is helpful and people are learning more than me doing the amount of stocks, because I want to go over actionable stuff where you can actually profit from it and gain some knowledge. Look at this. The 21-day, every time. Did you make money if you bought and sold it every time it did something? No. We just got whipped around. Okay, so this is telling you nothing. So you get rid of it because it doesn't do anything for you. Okay? Now, 1287 is your next line. That's your next line. That's your next support. If you can't hold it till then, you can tell me what your game plan is, but that's the way that it's shaping up. So NVIDIA, I just wanted to show this. Okay. The NVIDIA portion that I had, I was in at 1616. I blew it out today. I'm apprehensive about talking about what I'm doing from now on, because it seems like people are blindly following and not coming up with their own game plan. So I have to figure out how I'm going to do that and be more interactive with people if they're going to do that, because my goal here is not to do harm. But so what happened today? Okay, so we got rid of this and we're just going to walk through it. It came back down, right? We don't need these indicators now. Tested, rolled. How could we have played this today? What could we have done to play this to make it work? Well, there's a couple things, okay? And I just want to point this out for people that are trying to learn this, because I think this is very important stuff, because it talks about how you can get into the trade, right? So let's just expand these out and let's click off all of these moving averages for a moment. And let's click back on this. So this is pretty clear, right? I mean, you're starting your day off, you're not having a good day, we break down and then we rally. People want to be in this. Why would I be concerned about buying this here? What would make me think that this is okay? Okay, so you have a trend here. Okay. Well, let's just draw that. All right. You break here, you retest, and you don't break. Okay. You have a reversal bar right here. Let's just look at this. And I want to show this because this is exactly why somebody got into Snap today. And it's really interesting to see the differentiation between the two charts and why this was the better trade versus Snap. And I'm not showing it to be like you should have done this. I'm showing it so that you get it, so that you understand. And I'm just going to mark this for a moment. So you see this trend line? People that studied the RSI know this trend line, right? I'm doing it on a 5-minute chart because it works everywhere. The degree of probability increases as you go out longer on a chart time frame. The degree of probability changes incrementally higher as you go up on a time frame. Just want to hammer that point home. So what you have here is you break, right? And then you jump. What is this called? A bullish engulfing. Where does it happen? Right where the RSI breaks. So now I have 2 indicators that are telling me that. Okay. So there's a third that we could overlay. Now we're going to get rid of this vertical line. There's a third that we can overlay. Okay. Volume weighted average price. Okay. I'm way above the average price. So that's not really telling me anything at this point, but that does give me another trade that you can see right here with the wedge and breaking through that and then using this 5-minute bar as your stop. So if you missed it, there was another trade here, but we could talk about VWAP trades and I could show you how to do that later. But here's the point that I was trying to hammer home to this guy. And this was a guy. That's the point I was trying to hammer home. You have a downtrend line that you're getting ready to break. So when you buy this here and then you have follow through, so you have a bullish engulfing. Well, that's not your trigger. Your trigger is the next bar being over this. And when it's over it, what does it do? It breaks that. Boom. There's your stop. You're in the stock. Okay. So now once you hit this target, right, you're in the stock at 606. Okay. So you're up 7 points on that move. Simple trade. Okay. Simple trade. And now you're in it. Now you can decide if you want to hold it overnight. You can decide if you want to take the 7 points. You can do whatever you want with it at this point. You know, to me, this 615 is where I want to be in at, and it didn't get above there. So I'm no longer in this trade, but that's NVIDIA. And that's how you would use RSI and candlesticks incongruency to figure out where to get into this trade. And then we're going to do I'm going to do it on Snap as well. So it really hammers home. So, and show you why he shouldn't have done. Well, I understand why he did it where he did. And I think he's going to make money on the trade, but why it was more risky. And we're going to get into that. So OCGN, I bought this back today. You know, we broke out above these little levels. I pointed this out the other day. You broke above these levels. I closed above these levels. I think we're going to go back to 14 and retest it. We'll see. That's really it. You see the volume picking up. See how this line's here? And we just left this line here. Okay. I want to show that. See how it respects that line? So there's really no reason to do anything there, right? Let's just put these in. Okay. What are they telling us? That we're going higher. See how they're not in a trend. They're not trendless. See how these are not trendless. Okay. We're above the 5-day. This is getting ready to give us a shot here on this flag. This is a high tight flag. It's giving us ready a shot to get through 14. So I took a shot. Maybe it works. Maybe it doesn't, but the degree of probability is greater based upon that. What is this one? OCUL. This is one we have not looked at for a while. Let's put this here and let's get rid of this. And the first thing that I'm going to just point out to people is, do I even need these moving averages? No, because I'm in a base. there is value in this to see that it did not break the 200 when it came down. And there is value that we closed above the 50. So I won't say that there's not any value to those numbers. Now, that would be disingenuous, just trying to get a point across. But this is really very important. Once you broke this 3-4 days ago, that's what you were looking for. Now, your next point here, your next real level, okay, you can see where you closed right in the middle of that. But the next level is to get up to here. So when you buy this, you're buying it now with a 21-quarter target. I don't know that I'm buying this for $2 on a move like that. This was very powerful today. I mean, very powerful and really moved. You know, I mean, this was solid stuff. And there's your opening and your opening breakout. And you could even use that opening range stuff that we talked about, right? Here's your opening range bar, and then you don't want to buy it until it breaks above there. And then this could be your stop. And that worked perfectly all day, and you'd be in it all day long. So I guess we're looking at oil a little bit. Let's look at some oil. So you're still not above the 50-day, but what I do like is this. You see how you're coming out of this base? You've already broken. Now, you've broken here too, but this forecasted it sooner, didn't it? Let me get rid of these lines so you can see this, and let me throw this in. Well, I can't get rid of all of those. That's not going to work. So let's go back to this, and let's expand this out, and then we're going to click off these. Okay, so here's what I want to show you. See how this line is? See how this happened yesterday? And this is today. If you go back to this line, this move was forecasted when? Back here. Okay, it was forecasted a day or two early. RSI is one of the only leading indicators. Let that sink in. So that's what it's telling you here. Now, a break of this doesn't really do much for us. Where you really want to get to on this is you got to get above that. You got to get above 194. Get above 194, and then you can see, once you do that, you're going to have made a higher high. You're going to see interest in it. And then you might get back to that 230 level. But you need to get through this 194 first. That's your goal. That's what you have to look at. QRVO is in the newsletter. It did not come out with earnings. I thought that it did. Someone sent me a thing. Hey, it's down. It probably pre-released. And so I started looking. Couldn't find anything. I think it's just down because SWS is down, which doesn't really mean anything to us. Similar space, different company. We're in at 193.5. I think, closed at 199. I think after hours, looks like it bounced back up here after hours and is at 199.54 now. Okay. So, that's good. Look, I think right here, what we have to focus on is what do you do now with this? I don't think there's anything to do, and we really don't need the RSI, but, let me get rid of that right now so we can look at this a little cleaner. So I don't think there's anything to do here. I think that if you truly look at this bar, you have a nice hammer bar at the top. I mean, nothing's really broken here. So there's really nothing to do. Would I add to it here? No. I think if it gets down to this 21-day and you want to add to it around the 191, 192 level, do it. I think it's a great idea. RILY, I wanted to just touch base with here. Okay. You pulled back to support. You tried to break out. We failed. We talked about this the other day. You're just bouncing around here. That's all you're doing. I don't see any problem with it. As a matter of fact, if I get back to the 68 level, it might give me an entry. Look for a little reversal on this bar. Look for a higher high on one of these, and then it gives me a reversal. This is not changing. The XLF is at a 12-year high. We went through that a week ago, and I can do that real quickly just to point that out again. Interest rates are rising. They rose again today. It's why tech came in. It's silly, but that's what happened. Here's XLF. Here's your financials. Okay. They're spiking after 12 years. So that's not going to stop overnight. It's just not, it just doesn't work that way. So I'm comfortable with this. And yes, you could bounce around, but overall, I think you're fine. So SE, look, you got out of this. We drilled really heavily in the SE, right? I walked everybody through like these kill zones, and that's what we did here. You got in the kill zone, you broke out of it. You went right to 276, which was resistance, and you rejected. As soon as you cut here yesterday, what does this pattern look like for those people that know how to look at candlesticks? It looks like an evening star pattern, doesn't it? Okay, so it clearly telegraphed that you were going to have an issue. Now, whether or not you respected that or knew that, are two different things. One, having the knowledge, and two, whether or not you even implemented the knowledge that you now have, if you're even looking for them, right? So I'd make a habit of doing that. Going through charts, seeing if you can see, is this a morning star? Is this an evening star? Morning star, evening star. Yeah, you'll drive yourself nuts, but you'll also save a lot of money. And you'll also find good opportunities. Now, look at this. Bonk. We've opened at the high, closed at the low. What does that mean that's going to happen tomorrow? Okay, we're going to come in tomorrow. Okay, you can set your watch to it. Unless something happens where we reverse for some reason, like some news specific to this company or space, this is going down tomorrow. And it's probably going to retest this line and go down to like the 256 level. So that's why I wanted to show it, because this was actionable, whether or not you acted on it, and you are going down tomorrow. That's my opinion. So this snap, this is interesting because I really want to show this. So I was pretty clear where to buy this, right? And we went over this one yesterday because it really acted awesome on that news. That snapback with pins and everything, like this was just great news the way that this acted. And what transpired here? Well, this is what transpired. Nothing, absolutely nothing. We ran right to the 64.5 and bounced off of it. Now we're at 62.28, and where did we really close? After hours, we're at 61.90. That's okay. It's the Twitter news. That's fine. But you see how you're having problem with the 64.5 level. But I really want to drill this home because the gentleman that asked me to look at this for him, I was going, what are you looking at? And he's explaining to me what he's looking at, and I understand it. But there's a couple key things I want to point out here. You're in a downtrend. Okay, this is the 5-minute on Snap. You're in a downtrend. Okay, so what I'm trying to do, being in a downtrend, is figure out where I can get in if I want to own this at the best price. Okay, what's this pattern right here? Okay, so that pattern is a morning star, right? We know that from understanding those patterns, and I'm going to link those candlestick patterns in here again for those people that want to learn. This would tell me that to get from this Morningstar position up, I have $1.50 that I could make. It's going to take me here and show me that I can have $1.23. We're going to get to what that all means in a moment. Okay, here's my stop, which would be 60.59. Here's the high of the bar, which is 61. Breaking above the high of this is your trigger on the Morningstar. That's what we did. We broke above here. This is where your stop would be on this bar. What transpires? Okay, that gives me $1.50 and 50 cents worth of risk. I'm at 3-to-1 risk versus reward to get to there. Okay, where he wound up looking at it, I have to find it exactly, but it was something like this, where it was a bullish engulfing bar. It was either that one or this one, or it was over here. It was one of them, and I was trying to explain to him, is that a bullish engulfing bar? Yes, but it didn't even trigger. Right now, if it was this one, it did trigger, but for that trigger where he's buying it, and this was the point that I was trying to get across, and maybe it's my fault for not explaining it, your first level before you reject is 45 cents. Okay, your second level where you could reject is this trend line is 61 cents. Do I really want to put in that trade? Right now I'm at 1-to-1 versus 3-to-1, all because I'm not looking for the right pattern recognition and not looking for the right risk versus reward. Keep that in mind because it's pertinent. Now, he made out like a bandit. He called it perfectly. And what was really cool today, and I really liked and want to drill into, was the other thing that he did was this. And I don't even know if he saw it on the chart. I think he did because I think he brought it up. But he brought this up. And we were talking about this positive divergence in the chart from here to here, right? See how this is higher here, right? So he saw that. That was great, but you're still doing this in a downtrend. So you just have to be aware of that because this is really where the risk is in the trade for the time being. Now, the risk changes as the trade goes on, right? So now you're looking at the 15-minute, then you're looking at the hourly, and now you're looking at the daily. So buying this at 61 worked out perfectly because now he's in it and he can just use that for his cost. So that's why it's really important to understand those. Let's go through this, go to properties. It's not the properties that I'm looking for. This is what I want, properties. And then we're going to get rid of the RSI here. I'm going to go over here I think I've stated earlier, and I just have so much going on in this chart. Closed below 40. So I believe that we're still in there on the close. We did not close below 40. So let's get rid of all of this. And let's get rid. Right. So this was 2-3 weeks ago where we talked about getting out of this, right? We were in down here on the trade, bopped up, came back down, put this back on at 38.25 when we got above it. And we've been holding ever since. I've seen no problem with this. I don't see any reason to think that it's not eventually going to break out and give us a massive move. Just stay with it. Just stay with the trade for now. There's really not much more to say. I like that trade, but it's got to work. So team, I just want to point this out really quickly. I don't believe anybody even brought this up. They had excellent earnings tonight, and I just want to show this. So this could be one to watch tomorrow. I'm going to show you why. See that move? So this is a big institutional stock. You opened at the low. You gapped down to the 21 in the 50-day. See how the 50-day? Let me just show this. See how you closed below the 50-day? So that means who was selling? Institutions were selling. So they got out before earnings because they've been getting whacked during earnings. So they have to move when they can, right? That's the advantage we have being nimble. What happened after hours? Complete reversal, right? They're going to have to chase this tomorrow if they want to be in it. And the earnings were stellar. So people are going to, they're going to want to know why they're not in it. They need to be. And I think this has a lot of potential tomorrow. Get above this, like this 248 level. You can see how that's resistance there. And this is going to run. Twitter, I'm going to just show you what this looks like. This was before earnings. This is after earnings. These earnings were a disaster. And this was pretty clear that this was going to happen. I don't want to tell people to short stuff into earnings because it could just be disastrous. But they missed their subscriber number on monthly average users by over 1 million. It's about as bad as you can get. I mean, it's really bad stuff. And I think that this is just beginning to drop. I think it'll bounce around a little bit, but I don't think it's going anywhere. I think people are just going to get out of the stock. The censorship issue, whatever side you're on with that politically, frankly, I don't care. What people don't like is them being censored from their opinions. And if they felt they're going to be censored anyway, they're just not going to participate. And that's really driving them. It's one of the reasons why I know pins came in, but their numbers still crushed compared to Twitter's and Snap. It's one of the reasons why you see Facebook gaining so much traction, right? There is certain censorship there, but the platform locks you in. So you really just have to put up with it. Twitter doesn't really lock you in. You can click a button. You can wind up in YouTube. You can wind up in Pinterest. You can wind up in Snap. It's much harder in Facebook's situation. The only reason I'm showing this is same thing I said with pins. Do not buy this on the dip thinking it's going to rally. Just avoid it for now. So UPST, just want to go through this. Okay, you got to the 120 line and you rejected, and then you broke, and then this was your clear move today that you're going back down and you're at least testing the 50-day. So for me, you have a rising channel that broke here. You'd follow through at the 21-day, and you're probably going to the 50-day. This is not ready to be purchased. So the reason I'm showing this is why it's actionable is I think you can go lower, and you're not ready to buy this until it closes above the 21-day. You can see how it is not closing above the 21-day. It is being sold there. This determines who's in charge, bulls or bears, by what side of that line you're on. VZIO took out a new high, and the whole market sold off like the rest of it. It was not a bearish engulfing. People were like freaking out because the stock's down $1.50 from where they're in. Look, very clearly, our price point into this was $26. I'm at $25.68. Since then, it's been to $28.80. So you've already been up 10 or 15%. If you were concerned about it, you should move your stop to break even. Now, the one lady, I don't know exactly where she owns the stock, but just to explain this, if you're in a stock and you are concerned and you're going to worry about being down $1 or $2, okay, after you're in it, okay, you need to set a plan in motion. So let's go through what a plan would look like for this. Okay. If you bought this at 27, I'm assuming that you bought it on the down when it was coming down, because you're probably not looking at these kinds of charts because you don't know, and that's okay. But you're here. So let's just set up a little plan so that you know about this in the future. So let's just say that you bought it either here or you bought it here, because after this, it wasn't a 27, right? So it must have been purchased in here. Once you're in this wedge, and this was the low of the day, once you break that low of the day and you're in it, let's say you were in at the 27 level, which would put you here. Okay. Once you break that low of the day, there's no reason for you to be in this stock, period. You don't know where it's going once it breaks the low of the day. It could keep going down. And if you don't have a plan and process, that's how you get frustrated like you did today. You always have to have a plan. You always have to know where you're getting out of it. Okay. And for me, this is not one where I am, where I am overly concerned about. I'm really not. It's bouncing around and doing what it's doing. So that's it in a nutshell. WLL, and then I'm going to do the NASDAQ really quickly and the S&P, because I did mention that we saw a key reversal today, and I should probably just point it out. So WLL, I really don't need any moving averages. I really don't need anything. Okay, very clear what's going on here, right? Opened, closed, very simple trade. You close below this number, 38.82, get out. Okay. Why? Because you'll have an evening star pattern here. And now you've broken this support line, and support flips to resistance again. You don't want to do that. You have price rejection on both sides of this. So you really don't know which way it's going to go, but just get out. And I'll throw these indicators in. I mean, it doesn't really do anything for us, does it? So that's a very simple trade, right? That's your stop. And that's how I would look at it. And that's how I would play it. The cues I just want to talk about here for a moment, and this is going to be, I'm going to go over it extensively in the newsletter today. Look, 338.77. Where'd we close? 339.68. What are we all freaking out about? Because they didn't go up today? I mean, you have to put things into perspective. It's holding. We hit a new high today and then bounced off of it. It's fine. We're just basing for a little bit. Now, there's no need to do anything here. Now, look at this. Okay. This is what freaked people out and got me concerned as well. And then what did it do? Opened and closed at the high. So it's kind of still a reversal bar, but not really anymore, is it? Right? Because you closed at an all-time high. So why it was a reversal bar when it was down here? Because we encapsulated. You see the difference? Like here, let me just walk you through what I'm getting at. When I said it, it was a key reversal bar. So picture this being the open. Picture the stock being here where it was at one point. And if we closed there, we had a bearish engulfing bar. We do not want to be in this with a bearish engulfing bar, right? That was my concern. That's why I said we're at a key reversal level on your stops. What transpired? We closed at the high. Stock's at an all-time high, SPYs. And we're concerned. Well, I was concerned, I should say. So that's really it in a nutshell. As always, please feel free to message me. I hope this was helpful. I really like the format of this. I think it's way more educational doing it this way. And we'll go from there. As I said earlier, Saturday, 1 p.m. Eastern Standard Time, we're going to go over a lot. That's it. As always, just message me with any questions or comments.